the record button, Jim. Don't forget that, because this is going to be awesome. And you are going to be able to see this on our YouTube channel, which is Grow Global. And we'll put the link to that in there. We encourage you to subscribe. We do these Realtor Masterminds every week. And we used to do them on Thursdays. We're moving them to Mondays. So congratulations for you showing up here on time on a Monday. Hope all of you had a great weekend. My name is Jim Lambert. I've been selling real estate with my wife, Stacy, since the 1900s. Back in 1997, we started a business. Here's what we know. As agents, we can all work together to help grow our business. And it takes open-minded agents to jump on here and get on here. So give yourself a nice congratulations today for being on this and being part of it. You are not going to be sorry. With that, I want to get out of the way and I want to introduce Stephanie Gilezan. Stephanie Gilezan, just so you know, she is an absolute baller in the real estate industry. She also started her real estate business in the 1900s. She started at the age of 5 years young, and she got it going back then. So she's going to be introducing us to John Tavarez, our loan servicer. She's going to give you his background and his credentials and things like that. But just for those of you who don't know Stephanie, she is got over $632 million worth of listings right now. Yeah, that's $632 million in listings, with a lot of others that are under contract. She is ranked number 95 out of her brokerage of 87,000 agents. So you're talking to somebody who's in the know, who knows the people, and we couldn't be happier to have Stephanie take us and introduce us to John right now. Stephanie, take it away.
Thank you, Jim. And almost everything he said was true, but there was a few fluffs in there, right? No, it's all good. You know, one of the things that we've been talking about here on Grow Global, and I'm sure everywhere you're tuning in, is what is the state of the real estate market, right? For the last 3 years, if you're in residential real estate, you've been a little bit spoiled as to, you know, things are selling fast. And even in some markets today, they're still selling fast. But how do we pivot? How do we follow what's going on in the real estate industry? It's to get an inside look as to what's going on with it. Let's get the health of it. And my good friend, John Tavarez, who's with Villa Title, which is owned by Carrington Holdings, which is one of the largest loan servicers in the market. John does closings for me all over the country. And I wanted to bring him in because they've got an inside look as to, with being that loan servicer, what is really going on with residential home loans, so that we can give you a sneak peek as to what you need to do to pivot in your career or start looking for opportunities now that are coming. So John, I want to bring you on. Jim, should we set it up to where John's up at the front, or maybe he is and I'm just on the wrong view?
You know, I put him in as co-host. Let's see. Oh, he is right there. Yeah, let's spotlight him. Let's spotlight him.
There we go. All right, John, welcome. Thanks for coming in here today.
John, don't you love that when somebody makes, you're the big face on there, man. You're the big dog. So we got you highlighted.
Exactly. Well, yeah, thank you guys so much. Always appreciate coming on and speaking with all of you, with Stephanie and team. You know, obviously we've done a lot of work together. So anything I can do to be helpful, answer any questions, and kind of give you guys an overview of what we're seeing, you know, in the market right now, exactly as kind of Stephanie and Jim had said. You know, so my actual employer is Carrington Holding Company. So we do really everything in kind of the residential real estate space, but really kind of focus and cut our teeth in the mortgage servicing side of the business. So Carrington has recently grown. Our, you know, assets under service is around 1.2 million mortgages under service, which is about 150 billion UPB, so unpaid principal balance. And then, you know, one of our big partners is Mr. Cooper Servicing as well. And they've gone also on an incredible growth journey here in the last 6 months. And they're actually up to $1 trillion of mortgages under service, which is incredible. But yeah, you know, it's a really kind of interesting time in the mortgage market just in general. And Stephanie and I were kind of catching up last week and talking about this. And I know I've said this on meetings before, but you know, it's the first time in the history of the mortgage market that, you know, there's around 12 trillion mortgages, and I mean unpaid principal balance. So around $12 trillion of mortgage debt out there in the United States that's been issued by a lender. And 72% of all those mortgages were issued in between the years 2020 and 2022 for the first time ever in the market. And that's because we had historic lows. We had, you know, historic low unemployment. We had historic low interest rates. So allowed people, right? And one thing I do want to clarify, that doesn't mean everyone bought a home during that time, but they refinanced out of their current mortgage to get into a lower interest rate. So out of that $12 trillion of mortgages that are out there right now, close to $9 trillion of that was issued in a 2-year period, which, like I said, is unheard of. And so what that did is it kind of created this artificial, supply shortage, right? Because you had all these people getting into new 30-year mortgages that hadn't in this last 2-year period. And then you had COVID on top of that, where these mortgage servicers were not allowed to foreclose on their, even if people weren't paying their mortgage, which has never happened before. So you created basically this artificial, housing constraint, and the aspect is that there weren't REO units not flooding the market, but going into the market like there normally are in a natural kind of housing cycle. And you had all these people who now sat in this new loan that don't want to get rid of their 2% rate, right? Because who right now is sitting at a 2, 3, even a 4% rate is thinking, oh, I want to buy or sell my house or refinance and get into a 7% rate. No one's going to do that, especially the cost associated with that. So, and then on top of that, you're not having these normal foreclosure units to have affordable housing or have people trading. So you've created basically this artificial kind of housing shortage due to supply. So a lot of stuff, all you're seeing trading is these new home builds right now. But that's not to say that's not going to change. And obviously, as now we're seeing, Jerome Powell is saying he wants to see unemployment rate rise, which will mean people are losing their jobs, which will then add into foreclosures. But a big difference kind of in this market right now is that, because everyone likes to compare it to kind of 2008 and the great financial crisis, is the government has issued close to 92% of all mortgages out there. So meaning that a bank is issuing them, but they're being basically underwritten or approved by a Ginnie, Fannie, Freddie mortgage, meaning that they sell those to institutionals and they're backing that government loan. So let's say a mortgage servicer is going into foreclosure, is failing because their loans aren't producing like in 2008. And they're like, oh, too bad, you're going to have to go out of business and then get bought by someone. Now it's the US government holding kind of that bag, if you will. And so they're very motivated to keep that mortgage performing or put it into a loan modification or do something like that. So we're about to enter this very interesting time of where mortgage services have loans, are starting to go into the kind of foreclosure process or the short sale process. But then in the same breath, the government's motivated to kind of keep people in their homes and not have this huge wave crash into the market of foreclosure units, because that'll drive prices down, and they're the ones that eventually need to get paid back on that mortgage, unlike years past.
Hey, John, are you saying that the government might have learned their lesson a little bit from 2008, 2009? Is that even possible?
Exactly. So, so they're trying to do everything they can to kind of, push this along and slowly have a natural kind of process in the market. So what we're seeing, and it's really interesting, especially for, everyone on the phone here, is a lot of people still have equity, or, if they have a small piece of equity or their house isn't fully, underwater. And so they're a prime target for a short sale or getting out of their kind of mortgage, but a lot of people don't realize that and are uneducated on that, right? And then I think another interesting piece of that is you're seeing, everyone sees the headlines of Silicon Valley Bank, First Republic Bank, of these banks kind of going in, getting taken over, bailed out. Well, a lot of people like JP Morgan Chase had to take over all that debt. And so that just adds another level of kind of interesting and complexity into this market, because now you have someone who took over all these, mortgage loans and is now servicing them, but they're basically cost basis or whatever they got them at is much lower than if the original lender would have had them. So now you have someone who, maybe JP Morgan Chase, is holding a mortgage that they bought for 50 cents on the dollar. The homeowner's afraid because maybe they haven't paid their mortgage in 30 days, but what they're willing to accept on a short sale or to get out of the loan is much lower than it previously would have been. So there's a ton of opportunity out there for agents and brokers like your guys yourselves to get out there, start kind of moving these short sale assets, educating borrowers on what that process looks like. And as we know, that, you know, there's still people out there who want to buy homes, who want to get into a home, but they just don't have the ability to. And so a lot of these assets will move quickly. So I think it's just getting out in front of and educating people, and then educating yourselves so you know that as this wave starts to come in and these assets start to kind of be up for sale, that you guys know what you're supposed to be doing, who you should be talking to, and kind of walking through that entire process. So yeah, happy to, and I know there's kind of a long intro kind of kickoff there, but want to just kind of lay some groundwork out there, and then I know we can kind of dig into that a little more.
Yeah.
So we are talking with John Tavarez here with the Carrington Group, and he's given us the inside scoop. For those of you who have questions who are on here, go ahead and type them in the chat box, and we'll get John to answer those questions for you. His contact information is there, and you're going to understand here in why in a second. You're going to want his contact information. I'll teach you how to download the chat in a second. Stephanie, you were getting ready to say something when I talked right over top of you.
No worries, no worries. So John, when we look at, you know, the actual, you know, gosh, you said the amount, and I know Jim put in the chat box, $12 trillion worth of open mortgages that are out there in the market now. Do you have, you know, within Carrington, do you have kind of the health of what, of any of those, or how many of those would be in default?
Yeah, so I mean, it all depends kind of the book, but I mean, really industry standard right now of what you're seeing is anywhere between, I'll call it 6 and 9% is, you know, on average, right? So if you think of $12 trillion, and let's say it's 7%, it's close to $1 trillion of mortgages, or 1.9 trillion dollars of mortgages that are heading into a foreclosure or should be foreclosed on, aka could be an asset for short sale. You know, if you think the average home is $255,000, I think, in the United States, I can't do that math off the top of my head, but 255,000 divided by 1.6 trillion is a lot of assets. So yeah, this opportunity is just continuing to grow. And that's just kind of, if you look back over the last 20 years, right, of the average kind of foreclosure rate, and what we're seeing in our book, and I know Mr. Cooper and Freedom and JP Morgan, and kind of, right, that's 50% of the market right there, is that 6 to 7 to 8% range. And then when you take that on what the Fed's saying, if they want to see unemployment continue to rise to kind of combat inflation and everything going on, then you know that number is only going to go up. Right? If people don't have jobs, they're not going to be able to pay their mortgage, but they might be able to, you know, get out from under it. So, you know, we could see that almost $2 trillion mark jump to, you know, 3 trillion, right? And be closer to that kind of, you know, 20% mark, I think is realistic to see. And then also when you combat that with these larger big banks who have bought some of this, or not, have been forced to take over some of these regional banks, right? None of them are holding $1 trillion by themselves, but 5 or 6 of them get taken over by, you know, a top 25 bank. Like I said, then they're going to be more inclined to just get those off their books, not necessarily that they're fully in foreclosure or what have you, but their cost base is so much lower that they would rather sell and maybe take a loss, or, you know, not get their whole mortgage paid back, but to get it off their books, because they were almost forced to take over these regional players. And so I think it's just going to be a massive opportunity that we're kind of walking into here, and not a lot of people know what's going on.
And well, and that's
Definitely, we got to congratulate John real quick here. On a Monday, when we just moved, we always do these before, John, on Thursdays, just so you know. So we just flipped to Monday. You just broke the record for most agents ever on our mastermind. So 75. You must be an important guy if everybody's dropping everything Monday on noon.
I like it.
Everybody's used to Thursday. So well done. Great information. Everybody's excited to hear this stuff. Go ahead, Stephanie. We got a couple questions in the chat too, if you want
Yeah,
to.
we'll get to those questions, but I wanted to bring up something. What John was touching on here is that, you know, you've got unemployment rising, which obviously means that people aren't going to be able to continue to pay that mortgage. They can't go and pull the equity out of their house because the interest rate on that equity line is going to be so much more that they're not going to be able to afford that either. And so you've got a unique opportunity, whereas back in 2008, 9, 10, 11, 12, I was doing hundreds of short sales each and every year, and we were negotiating the debt. You know, we had to convince the bank why the property wasn't worth, you know, what the debt, what the loan owed on the house was. But, you know, and I know Stacy and you, Jim, have also done this recently, where we've closed sellers that have been in foreclosure. And like John said, there's equity there. So you're not having to work through the whole entire short sale, you know, scenario. And so I know somebody asked in the chat, well, what is the opportunity here? Well, the opportunity is to start having conversations, to maybe start marketing toward those that are struggling, that have lost their job, because there's where the listings lie. That's where the opportunities lie. And I want to circle back, because loan servicing, for some of those on the call today, John, I want to break that down. I want to break down the definition of what a loan servicer is for those that have not heard that term or not sure exactly what that role is. Go for it, John.
Yeah, perfect. So, and great point there, Stephanie. So, you know, everyone's heard of, you know, a mortgage originator, lender, right? You got Rocket Mortgage, Loan Depot, Chase, Wells Fargo, et cetera, the bigger banks as well. But a lot of those players will own and keep their servicing rights, but a lot of people also will sell those, and they might only be a loan originator. So a loan originator obviously is someone who issues the mortgage, issues the debt out, and then a loan servicer is someone, and all they do, it's a separate company, is collect that mortgage payment from the borrower each month. They, you know, on the back end, basically then, okay, principal balance is going to pay off this debt. Maybe it's getting sold to an investor, et cetera. And then, so there's a division that basically collects payments. There's a division that modifies mortgages, right? Like we're talking about, that has the ability to kind of change the mortgage as it's bought. And then there's a whole foreclosure and default unit where all they do is basically a flag gets filed, or a file gets flagged, and then they start working through that process, right? Okay, hey, you know, John Tavarez hasn't paid he missed his payment this month, so he's 30 days behind. And then once it gets to 90 days behind is what they call seriously delinquent. And that generally will kick off the foreclosure process. But also you've got to understand is that, you know, like take Carrington, for example, we've got 1.2 million loans under service. Let's say, you know, for easy math, 10% of those are into the foreclosure process. That's 120,000 mortgages that we're having to work through this process with. So, you know, there's a lot going on. It takes, you know, just because someone's 90 days delinquent on day one doesn't mean the foreclosure process is going to start, or doesn't mean that file is even going to get flagged at 30, 45, 60 days. And so there is an opportunity for you guys as well to kind of get in there with these systems and move that asset off their books. But basically our whole role as mortgage servicers, collecting payments, reperforming, or, you know, repackaging loans, if that's part of the process. And then the foreclosure process is, you know, eventually kicking someone out of their house, and then going through the process and liquidating that asset to get that payment repaid. So that's kind of the...
And John, on that last note, I mean, really truthfully, be honest with the audience here, because I don't think the goal is for the loan servicers to ever truly be in the real estate ownership business, right? I mean, they would
Correct.
much prefer that people like us who understand how to work with sellers that are in these circumstances, go ahead, get that property sold so that you're never having to maintain the property, never having to pay the utilities, the insurance, and all of those things.
Spot on, exactly. And a lot of companies like us, right? You've got to hire a third party who's then got to manage the property, who's got to pay the utilities, who's got to cut the grass, who's got to make sure it's keeping up. So every day that file is on our books, we're essentially losing money. that's the way you need to think about it. Every day a loan servicer has an asset that's underperforming. It's just money going out of, their account, and that they're having to pay for it. So the quicker they can get that asset off their books, the less money they'll make or will lose, and the less headache they will have, right? Because it's exactly like you said, we want to do what our job is, which is collecting payments and paying our investors and keeping that big machine rolling, versus trying to have to now manage properties, make sure the asset's sold, get it off our books, making sure we're staying in compliance and everything that has to deal with that. So the quicker we can get assets off our books and get them moved, the happier we are. And that's why a lot of times servicers will take, a payment under X amount, even if we're still going to lose money. We're going to make money in the long run and not have to deal with this headache, because we're losing money, like I said, every day that it's on our books.
That's right. That's right. Okay, Lee, let's see here. Lee put a math problem in there that says, okay, 1,600,000,000 divided by 250,000 equals 6284.51 average number of houses that may be going into foreclosure. I think that's wrong. I think, is it 6 million? Who can do that math again?
Yeah. That number right there is
1.6
billion. So you
I'm sorry.
Yeah, so that would you need to add a few zeros there, which would be 3 zeros. So if you add 3 zeros to 6, it would be 628,000.
What's the total number of mortgages in the United States, just the actual that are just being serviced right now by servicers? What is that number again, John?
It's 12 trillion.
12 trillion in dollar volume, right?
Dollar amount. Yeah.
What would be the number of mortgages if we were going to say like 6 to 9% of those could be possibly running late?
Yeah. So that would be, we can do this real quick. Let's say it's 6.
Everybody's got their phones out doing their calculator on their iPhones, doing the math on it. I'm a product of public education, so you got to go slow with me on this. But Lee, we're going to figure this out for you right now. We're going to do the math.
So from a rough estimate, it'd be 6.4 million assets.
6.4 million total mortgages, and approximately, let's just say 6% of those could be late. That's 384,000, Lee.
Sorry, I meant if you take 1.6 billion, which is the average foreclosure rate, divided by 255,000. Yep. Which is the average value of an asset in the United States.
Okay.
It would be 6.4 million homes will be heading towards foreclosure.
6.4 million homes could be headed toward foreclosure. And I love Jennifer Jacob Cooper's comment in the chat box here. This is fantastic. Definitely on point with market analysis. So I'm hearing I can ride both sides of this market change. That's exactly right, you all. This is where, when all of us that have been in this industry for quite some time, I've been in it since 1999. And no, I did not get in it at 5, like Jim said in the beginning. I was 21 when I got into real estate. So quick math, I'm 45 years old. Okay. But 24 years in this business, we've seen a lot of different markets, right? When I got into real estate in 1999, interest rates were 8.5%. That was what everyday interest rates were, right? And then they started to go down. And then the big crash happened in 2008. And those of us that knew how to seek and be prepared for the opportunity at hand, that's where we all just exploded, right? And that's where we just climbed this amazing ladder. So when you hear about, the housing market's this, or it's not a boo-hoo day at the parade, you all, it's opportunity. And so that's why we're driving this content right into your brains so that you can seek the opportunity that is out there in hand. People say to me all the time, we taught short sales last week, and you can go see all kinds of training that we've done on short sales, but we brought John on so that you understand that, just because the housing market is still booming in certain markets doesn't mean that these opportunities aren't out there. And so if you're short on listings, go start recognizing in your marketplace how you see loans in deficiency. Remember, visit the public records, see where the les pendants get filed, start looking, start having those conversations, start building this into your social media marketing or however you're getting in front of your base to put out the olive branch that states you've got a specialty when it comes to dealing with people with unpaid mortgages, right? If they're struggling, you know, people are looking for value in us. They're looking for problem solvers that they want to do business with. So be that person. So that's why John's on here today.
Yeah, one of the things, Stephanie, I think we want to make sure we stress on this is following the Wayne Gretzky analogy, right, of skating to where the puck is going. Is if you're going to get into this, you're going to need to get specialized training because you can really damage someone financially if you don't get specially trained. If you're somebody who's just going to dabble in it, find somebody who has been specially trained and make them your referral partner. And then every single person on here today, the second we get off this, can pull their phone out and they can make a quick video. This is what we used to say back in 07, 08. Back then, we would say, look, bad things happen to good people sometimes. They have divorces, they have medical crises, they lose their jobs and things like that. And I want you to know that if you know someone like that, please introduce them to me because I'm here to help them. I have a group, a partnership that can help them if they happen to get upside down or backwards in their mortgage. They don't have to go through foreclosure or bankruptcy. I can help them. Introduce them to me and we'll problem solve. We'll do what's absolutely best in them. And you can make that video. You can put it on your Instagram. You can put it on your Facebook and watch and see, put your network to work for you, referring people to you that may need your help because we see by the numbers, it looks like there's a lot of people out there that need help. And look, they may not have gone 120 days late yet. Maybe they're just 30 or 45 days late, but I'll bet you John probably knows the stats on it. If not, I'm going to put you on the spot. But once somebody goes 30 days late, there's probably a big percentage of those that end up going all the way because they're like, you know what, my credit's already jacked. I might as well just go down the drain with it. Is that what you find, John?
Oh, yeah, exactly. I mean, I think once you've missed a mortgage payment, especially, and it depends on the type of market, but I think it's like 1% of those files end up becoming current. So 99% of those end up going through the funnel and into that foreclosure. And exactly to Jim and Stephanie's point, there is a lot of this is education, right? Educating those current borrowers and sellers because they might have just lost their job, or maybe they didn't even lose their job, but maybe they had something happen in the family or got divorced or something happened, and they're stressed about this home that they own and the mortgage rate that they have. And maybe they got an ARM loan where it was 2% and they know it's going to get to 7% at the end of next year. And they don't know what to do, right? They're feeling stuck. They don't know. And that's a hard and sometimes embarrassing conversation to have. You don't want to call the servicer and ask, what are my options here? Because no one wants to do that, but maybe they see a video or they see a post of, hey, are you in financial hardship right now or in a time where you need to sell your house, and this is what I can do to help you get out of it. And it's just the relief that they have of, hey, maybe they're not even 30 days late, but they're struggling to make ends meet. It's like, hey, you still have the opportunity to get out of your house and make X amount of dollars, or just be out from that loan and then continue to go live on your life and rent a house or whatever. And I think that's the biggest thing, is just educating people that there are these options out there, because so many people aren't educated in the mortgage space and what goes on. They signed this 30-year contract and that's all they know. And they think that they have to make these payments for the next 30 years and they don't really understand their options or understand the market that they live in, right? So I think that's where you guys come in and kind of show that value.
And John, one of the things that might happen is they might end up with a loan modification. And look, as a real estate agent, you're not going to get paid to do a loan modification. But look, we're not always in this, right? Just to get paid. We're in it to help people. And I can tell you this, you want to build brand loyalty, help somebody stay in their house when you're not getting paid. Do that. We helped a lot of people that were able to stay and were able to loan modify. We didn't get paid to do it, but those people loved us from then on out. You want to talk about getting referrals, save someone's house for them, help them go through the process and get them to talk to the right people and be able to stay in their home. They'll refer you business left and right from there. And we have a question for you, John, from Raymond Plummer. Raymond, appreciate you being patient on there. He said, John, now that we know this, what is the call to action to help you? And is there certifications needed to work with you?
Perfect. Yeah. So, and I think this is why Stephanie and I originally had this conversation, right? Is from a servicer perspective, and Stephanie and I always talk about this, I think this is why her team did so well, is they know exactly how to put the loan package together, exactly how to submit the offer. And so every servicer has a little bit different of workflow, I'll call it, when they're going through a short sale or a foreclosure process. And if you know what you're doing and are educated and trained in the space, basically, you know, we have a list, let's call it, of 10,000 brokers and agents out there that we know in each area that have submitted saying they can take on these short sale deals or foreclosure deals. But then there's like a side list of people they actually use, right? Like, hey, Stephanie's super good in all these areas. Whenever her package comes in, I know I don't have to review it. I'm not going to ask for missing documents, etc. And that's how you provide value to the servicer, right? Hey, I know this agent is really good at this process. They know what they're doing. If I have to come back with something, they're going to get it back to me very quickly. The package is going to be submitted in the right order, etc. And back to what I talked about at the beginning, all the servicers are looking to do is move assets as quickly and easy as possible, right? Because this, let's say John Tavarez is working at, you know, Carrington Mortgage, and I have 100 files I need to get through. Well, the quicker an agent or someone helps me get through them, the more likely I'm going to be to send files their way, because it makes my life and my job easier. So really kind of being trained and understanding the whole short sale process is such a huge asset, because then guess what? You build a relationship with a servicer on short sales. And then guess what? Maybe when a file goes through foreclosure, that servicer is going to pick up the phone and call you and hand you a listing, because they know you, they know you're good at what you do. And if you're doing a short sale, you can do a foreclosure for them. So it's going to be kind of compounding of like, hey, I'm educated on the short sale process. I can create this relationship. And then now I'm going to start getting leads from X servicer because they know I'm good at what I do. And so that's what I say. It's just making sure going through this process right now where foreclosures aren't through the roof and people aren't getting flooded with them, or in the short sale process, kind of learning that process, getting the skills, building those relationships so that when there's, you know, 120,000 files going through a servicer system, they're not going to have time to work with, you know, a one-off random agent. They're going to send all their files to an agent they know is good at their job.
And for those of you out there who are wondering, well, how do I get this short sale training? Last week, if you missed it, our mastermind, we actually had a short condensed 1-hour version for you to watch where you would decide, hey, do I want to go and actually get short sale training? Because you're not going to get it in 1 hour. It's going to take several hours of work and putting together a packet and being ready to go. But we have a YouTube channel that we'll actually post here in the chat that you can go to and see last week's training that we did, because like I mentioned before, it's worth repeating. You absolutely can destroy somebody financially if you as an agent are not trained up to date in how to handle and how to get the proper letter from the servicer, which is going to get mortgage debt forgiveness for your client, and also have the team in place, attorneys and tax advisors that can help that client to make sure they're not going to be stuck with a big 1099, right? For getting the debt forgiven, all those things you need to get through training. John, great answers on this. We're going to keep going because we got the questions racking up here. John Montreux wants you to make a prediction. Where do you see the interest rates, short-term and long-term, going? Care to wager a bet on that as to where they're going?
Wait, if you can tell him that, you can tell me if I'm going to win the Mega Millions tomorrow night.
And also let me know which stock to put in on here today. I'm going to get in on that too. We'll follow. You got any insider trading info that we can jump in on?
Yeah, no, I wish I could predict it, but you know, I think what most people are hearing out there is they think there's going to be an additional rate increase. We're not going to see anything major. I think it'll be another 25 basis points through the end of the year, and then I think it'll hold on, but I don't think we're going to see interest rates start to come down for at least another 12 to 18 months. I think they'll probably settle and hold for a year before they come down. Is where I'm putting my stock in. So, but that's about as you know, that's just me taking a guess. So don't hold me to that.
So Jennifer Jacobs, she says on here, she says she's thinking of how many homeowners could be help and continuing homeowners even. Sounds like a lot of future closings to me. They can come back from that and buy again. I wonder if they would remember me. And I can tell you, Jennifer, from doing hundreds and hundreds and hundreds of these back in the foreclosure crisis and the Great Recession, yes, they will remember you. And yes, you can put them on a path in a credit repair program. You help them alleviate their debt, get out from underneath an upside down asset, a non-performing asset for them, save their financial life from having to do a foreclosure and also a bankruptcy to back that foreclosure up. You help them do that. Yes, they will remember you. And yes, they will come back to you and buy again. That absolutely is possible on that. There is Stephanie answer just below that. Yes, they will remember. And they'll also pass your name around to other people on that. Kim Campbell says, wow, great information. Agents growing the real estate business. Great stuff. Jamie Parker, I saw your hand up earlier, but it looks like you maybe put it in the chat. In 2008 market, I would use an attorney to process the short sales. Are you guys, as your title company, offering that type of service or other attorneys, again, that we can partner with? He was trained back in the day and had the certification back then. What's your answer on that?
So it's all independent by market. So obviously some states require attorneys to be involved. Others do not. So I just say it depends on your market. And a lot of times, we kind of at Villa Title, being that we're, sister companies with Carrington, are very familiar with the short sale process. And so it always helps to work with a partner who understands that workflow, because just like we were talking about, it's not like a traditional sale. There's a bunch of other stuff you need to do. And a lot of these other title shops will say like, oh yeah, I can do that. But if they've really only been processing refis and traditional purchases, that it's going to be a long, bumpy road. And, from someone with experience like Villa Title, we're able to help you guys kind of through the process as well. So I just make sure you're partnered with a company that you feel strongly about and know that they have, experience in the short sale kind of workflow in this market.
Hey, John, to go ahead and pump your company a little bit on here. You're a sales guy like the rest of us that are on here. So tell us a little bit about the title and also what states you service, because we actually have agents on here from all across the country.
Yeah, so Villa Title's in 43 states currently that we service. And I think what's a little different about us and why we work great with groups, like Stephanie, is that we have a centralized team that's assigned to each and every agent and or client. And that single point of contact is going to work your transaction no matter what state it's closing in and from start to finish. So you will not have to be talking to multiple people or, the order entry team and then the curative team and then the disbursement team. It's one single point of contact that'll work your transaction from start to finish. Like I said, in any of the 43 states we're licensed in, so that you can develop a relationship with that person. They know your communication style, your workflow, etc. And then out there to kind of assist you. And really it works great for our agents and brokers as well, but also for your clients, right? If they have questions or want to call in, they're not calling into an 800 number, they're emailing directly to someone or calling in a direct cell phone number. And because they're working that transaction from start to finish, they have intimate knowledge. And we say we almost train them like a transaction management coordinator or someone who's kind of keep that deal moving from start to finish. And, they're incentivized for that deal to close, just like you guys are. So yeah, we're excited and think we can help, really anyone on this call from the short sale process, traditional closings, etc. So yeah, whatever we can do to help, feel free to reach out. I've got a team under me that can help anyone on this call as well with property profiles, farm reporting, etc. Anything like that. I know I saw someone in there, which I like. The key is the data, not the drama. I'm going to use that one. So anything like that, any data or anything you guys need, feel free to reach out. We're here to be a resource for you guys and help you grow your business.
Hey, John, the CDPE designation from back in the day, is that still a thing? The Certified Distressed Property Expert designation, is that still a thing, or did that go away after the market came back?
I am not sure. I know there's a few different certifications out there, but I don't, and Stephanie, correct me if I'm wrong, I don't believe there's like one standard one out there. But yeah,
There-
I don't know.
There's not, there's a lot of education out there, you guys, and I'm gonna always tell you, if you can obtain a designation, go ahead and get it because it's great credentials, but it's not something that banks put on you to mandatorily have. Like, they are not looking for that specifically, but it is good, to have the education, because look, there's work behind this, right? You don't want to screw up somebody's, financial livelihood because you don't know exactly what you're doing. So like Jim said earlier, always partner with somebody who has, and then learn it that way. Okay.
I saw one of the questions on there. Somebody was saying, who could I refer these out to that I get them as a partner? If you watch last week's Mastermind, we actually discussed that. It's on the Grow Global YouTube channel. Make sure you subscribe to that, guys. We have all kinds of great, if you're loving this, by the way, a round of applause here for John. He's doing awesome, right? But we run different topics each week, and we have experts on there to speak about different things. So last Thursday, we moved them to Mondays now, Mondays at noon Eastern Standard Time. But we also record them on the YouTube. But I would encourage you to be on these live. The reason is you can ask questions just like it's happening right now. We're going to get to some more of them here in a second. But also, if you tend to watch something as a recording, how often do you ever get around to doing it, right? So just time block it out, noon Eastern Standard Time, 9 o'clock Pacific, and the times in between there on there. So we're speaking, John, it's not Tavarez, it's Tavarez. Is that right, John? I was throwing my farmer Ohio accent in there, Tavarez. So Tavarez, we got you all right on that. Some other questions, so they're asking states for Massachusetts and Rhode Island. Are you guys there also?
So we are not in Massachusetts, but we're in Rhode Island.
We're in Rhode Island. Okay.
Yeah. And then one thing too, I just toss in
there.
It
looks like you're in Massachusetts. I was just I was just looking it up, and there's an office, Wakefield, Massachusetts, Villa Home. Is that not?
Yeah, so that we have an office out there, but we process refinances, but we don't do purchase in Mass. Yeah, don't ask me why. It's a big pain point for me. But yeah, so we don't do purchase or short sale in Mass.
Got it. Okay, cool. But Illinois, we've got some big Chicago agents on here, some baller Chicago agents.
We are in Illinois. The states we're not is Hawaii, Utah, Oregon, Oklahoma, Massachusetts, Connecticut. Every other state we're in. But and I could put our kind of map in there as well. And then the only other thing I was going to throw out there for you guys as well is, one, and I've seen a lot of questions about sellers and borrowers, and then also about servicers. You guys should approach it as those are two different channels for you, right? For leads, right? You want to build a relationship with a servicer or asset manager who's going to have kind of these assets that you'll start to, create relationships with, but then also from an education standpoint of sellers in the market, right? Is that you can win leads from both kind of sets. And to Stephanie and Jim's point, a lot of that's going to be educating yourselves, becoming kind of the expert on that. As this market's a little slow, you have time to kind of become that expert, and then just educating sellers and then creating relationships with the servicers is going to go a long way for you to kind of build up those two different channels for leads for you all.
And for those of you who are looking to turn this into a business, also what Stacey and I did, and Stephanie, I don't know if you did this or not, but Stacey and I actually would do the back end of the short sales for agents who were outside of our marketplace, right? In the city, Central Ohio, Columbus, we did our own, right, with our own listing and our own sign in there, but we would partner with agents across the country. They would actually list the home in their area, and that means they get all the buyer leads and things like that. And then we processed them out the back end because we were really good at negotiating and getting the debt forgiven for their clients. And so we did a lot of deals like that out the back. So if you're looking to get into that, if you're watching this today as an agent, that's something you could build as another stream of cash flow coming in. And again, getting ahead of the game just in case things take a little crazy turn. I mean, John, I think I saw the other day, Americans' credit card debt is climbing. Are we seeing that like at a record pace because people are living off their credit cards? And we just saw that student loans looks like they're going to have to be paid back, where that's been on a forbearance. People haven't been paying their student loans for a few years since the C word came in. Yep,
exactly. Hit the nail on the head there. I was telling Stephanie this morning, actually, was just looking at a deck from our capital markets team, and this is all they do is, credit card debt is almost at an all-time high. And then in the same breath, cash and savings accounts is almost at an all-time low, which is not generally a good combination when unemployment's going to continue to rise. So yeah, opportunities are out there and about to be prevalent, very prevalent. And so, I think as this kind of wave continues to grow, the more you can educate yourselves and become an expert at it, you're going to be just so far ahead of anyone else who, once this wave crashes, they're going to try and get into it. But you're already going to have the relationships, already going to have the certifications, already going to have the knowledge, and you're going to kind of corner your own market when everyone else is then trying to get into it. So I think, these calls set up by Stephanie and team are incredible. And yeah, whatever we can do to be helpful, definitely, like I said, don't hesitate to reach out. And whatever we can do to help you guys, we want to be a resource.
Yeah, get things ready ahead of time versus being reactionary, right? Proactive versus reactionary. Raymond Plummer had a great point. Relief moratoriums are expiring as well. And also, I believe, John, you'll put the link to John Herhold, you'll put the link to our YouTube channel in here so people can click on that and they can go ahead and subscribe so they can see it. We'll do these every Monday at noon Eastern Standard Time. And by the way, for those of you who want to download the chat, because there's a ton of great information in here, plus agents that you can network with. If you go down to the chat box and hover over the three little dots, there'll be a word pops up more. Click on that and you'll be able to save the chat, the entire chat, to a text file on your computer. I'm not sure if it works on your phone or not, but it definitely works on your computer. You can do that from there. So we're speaking with John Tavarez here. He's helping you set up and establish a relationship with Villa Title in your state. There are 43 states across the country. And what can happen is if you develop a good enough relationship, when they come across these deals, they come across a homeowner who's a good person who had something really bad happen to them, they can just slide that one to you. Hey, can you reach out to this person? They need some help in your area. And now you're getting ready-made listings with people who have to sell. They have to sell, right? And those are the best type of people to work with, are people that have an absolute need. And you can literally save them, get them back on their financial feet. You're saving the bank money, you're saving the servicer money. Everybody wins in this deal. The commissions get paid. A lot of times the bank can file a mortgage insurance claim, so they get made whole. And everybody ends up being a winner in this thing. It ends up being a great deal. And we can save communities from losing value by short selling them instead of foreclosing them, because a foreclosure is going to sell for way less. You're going to gut the community. Everybody in the community loses money on their equity, and it can end up being a domino effect where they all go down the rabbit hole. We do not want to see that again. So congratulations to all of you being on here. You are being proactive. Again, you can put a message out today to your social media, letting people know, asking your sphere of influence, who do they know that might be in trouble, that needs some help? Have them introduce you on a private message, of course, the consent of the person who's needing that help, and see what you can do for them. Maybe you can help them stay in their home. Maybe you can help them talk to the servicer and get a loan modification, or maybe they need to sell. One thing I found, John, that a lot of people forget is when you're not making the payments, that payoff is going up, and it's going up quick, right? Because there's all kinds of fees that go on there. Somebody misses 3 or 4 payments, it can easily add $15,000, $20,000 to their payoff.
Yep, exactly. So the quicker, you're able to address that and put out a plan of action of how we're going to get out from under it, the better. And like I said, you're going to be, people find themselves in unfortunate situations all the time, and you're going to be literally that lifeline that they're looking for. And it can sometimes just be as simple as a conversation and educating them on the possibilities that they have that they might not know about and don't want to have a conversation about. So I think, yeah, continuing, like you said, to reach out and educate sellers and then continue to grow relationships with servicers, et cetera, will pay off huge for everyone on the call.
It's going to be great. I see Jamie Parker, you're unmuted. You had a question earlier. Your hand was up. Do you have a question, or you're just unmuted?
Oh, sorry, I was unmuted, but just out of curiosity, where do you see, this sort of a little off from this, but where do you see like what's happening with the economy maybe affecting like short-term rentals and investors aiming in that direction? And I know we have a lot of other experienced agents like Stephanie as well on here who probably has some experience in that as well, but just curious where you see that may be affecting the short-term rental market, the Airbnb, VRBO, investors building on that.
Yeah, I mean, I think that's a great point too, is, to not just think of these short sales or foreclosures in a non-investor sense, just a single owner, right? A lot of these, so kind of twofold. One, I think it's all dependent on the market they're in and the operator. I think if you're a good short-term operator, you know what you're doing, and this is maybe your full-time business, you're probably going to be okay. I think there's a lot of people, what we just talked about at the very beginning of the call, that, from 2020 to 2022 got floating rate debt or an ARM loan on, that they were able to qualify for, way bigger amount than they probably should have. And now they're over levered and they should have bought 2 short-term rentals, and instead they bought 6 because of the prices to it. And now they're underwater on 4 of them and they need to get out. Same kind of thing, is that's an opportunity for you all to come in and, be able to sell those assets. And maybe it's to a different investor. Maybe it's to someone who just wants to own the house and live in it themselves. Maybe it's to a different operator, etc. But I think the short-term rental market and that kind of investment market is definitely, as we're seeing, going to be impacted. And that's strictly because people are, thought interest rates would stay as low as they were for ever, or for 5 years, or for 10 years, not the quickest rate hike we've ever seen in the history of the mortgage industry, which put a lot of people underwater, right? So I think that's another huge market you can go after. And same kind of thing is, right, maybe they're drowning and they don't know how to get out from under it. And it's as simple as, hey, let's sell 3 or 4 of these assets, get you into a new loan, and then, keep you surviving from there. So another point of, like, these short sales and foreclosure opportunities aren't just to, the local people in your area who own their house that they live in. It could be kind of those investors as well.
John, do you guys just do residential, or do you service commercials, or commercial also, Carrington? The reason I ask is I think one of the next big bubbles to pop outside of the student loan bubble is going to be commercial. We're seeing all of these notes coming due that are on these balloons and things like that. And interest rates have tripled since, or doubled at least, since the last time they took them out. And we're seeing a lot of vacancies and things in commercial spaces where maybe a lot of companies aren't going to renew their leases on those spaces because a lot of people are working from home and doing meetings like we're doing right here, right, on a Zoom. What do you see happening in that market on the commercial side?
Yeah, so Carrington only operates on the residential side. Besides, Villa Title is our only arm that operates on both the residential and the commercial market. Because of that, we're obviously pretty involved on the commercial closing side and just seeing what's going on. But you hit the nail on the head there, right? A lot of people, same kind of thing as we talk about, the Airbnbs and other short-term rentals, is people got floating rate debt that was, 5%, and it's climbed to 17%, right? And their payments look a lot different. And, maybe people aren't traveling as much because of inflation, because they lost their job, etc. And so I think the commercial market is in a really interesting place. It's always kind of been a little more durable than the residential market, but I think, you've got a lot of interesting factors coming in that's going to put a lot of stress on the market, and think there's going to be some huge opportunities on that side as well. I know, obviously, Stephanie is also an expert on the commercial side, so we'll let her add anything that she has there as well.
It goes back to, on the commercial side, obviously we subscribe to data, and that's how we get a lot of our business, our listings and so forth. And when you look at loans that are coming due over the course of just the next 12 months in commercial real estate, it will astound you the amount of loans. And, the thing about commercial is that, look, what's commercial real estate all about? It's about how does it make that property owner money, right? Well, if the loan is coming due, whether they're default or not defaulted, they're screwed in a way, because going from a 3% interest rate up to the 8, 9, 10, sometimes even more than that, that's not going to pencil. It's not going to make the same bottom line number as it did for the last several years. And so what we're seeing there is a lot of people, and banks are tightening up, right? And so, you know, we have a listing that's coming on the market, a hotel listing, where when I first reached out to him and asked, you know, look, what's your plan? You've got a loan coming due in September. What are you going to do? And he said he was going to refinance. Okay, well, he went back to his bank to refinance, and they said, well, here's the problem. We know we gave you this loan before with 25% down. Now we want 50%. He didn't have the 50%. He's a hotel owner. He just came out of COVID. He just now started this year making money again to bail himself out of what he lost during COVID. So there's a lot of things in the commercial, you know, markets as far as vacancy, like you alluded to, Jim, and just, you know, and a lot of these, I want to touch on the Airbnbs and the VRBOs, because, you know, I had a call over the weekend, great client of mine, you know, he bought 17 during COVID. He financed them all. Man, he's rolling. He's going to make all this money. And I'm like, congrats, man. Okay. And now he's calling me going, I don't know what I'm going to do, because he can't get people to rent now. He's even lowered his rates. And so I think that always goes back to what market are you in? But, you know, you look at, especially some of us, like, you know, I'm in Louisville, Kentucky. There's really, you know, 2, maybe 3 times a year, people come to Louisville, Kentucky, right? So it's a lot, you know, they just flooded the market. There's too many of them now. And those people do need to sell and get rid of some of those, because they're, you know, they just don't have the occupancy for them anymore. So there's all kinds of opportunities happening, especially, you know, in both worlds, residential and commercial.
Yeah, if they go out and get trained, Stephanie, I mean, yeah, doing the commercial, one of the biggest commission checks Stacey and I ever got was our client had a blanket loan covering an entire apartment complex and a warehouse. The warehouse wasn't performing, but the apartment complex was. We were able to get the bank to split it, let him keep the apartments, and we just short sold the warehouse, and it worked out for everybody as a win-win for everybody involved. And that was awesome. And it was a monster check. And so we enjoyed it. Stacey even negotiated in 2 giant boulder rocks off of the commercial thing, and we ended up with them in our house in the front yard. So just, you can negotiate all kinds of stuff on the commercial side. You can get that. So I've heard this question a couple of times for you, John. I want to make sure I get to it. Oscar has a question. Is there a fee for your service? Explain how the fees work there, John, or how you're making your money for the title company.
Yeah, no, so we just charge, you know, a closing fee and then the title premium, just like any other title company out there. But because we are large, we don't charge any, you know, coordination. We call junk fees. Like some of the smaller companies you'll see charge a coordination fee or a doc fee or anything like that. All we charge is the title premium, obviously based on the purchase price and what's being insured, and then a closing fee, which is generally on the residential side is $550, and then on the commercial side depends on the dollar amount. But yeah, those are the only fees we charge.
Love it, love it. That's great. No cash grab, no money grab for you guys. Junk fees. I love that on there. So we're getting close to wrapping up. For those of you who are on here, you can go down and you can hover over the 3 dots in the chat box, and you can download the chat now to your computer, so you have that. But John, for those of us, we're going to put your contact information inside the YouTube down in the description. But for those who are maybe listening or something, go ahead and just say your contact information out nice and slow, so they can hear it in case they're driving or something like that.
Yeah, perfect. So you guys can email me at John, which is JOHN .Tavarez, which is TAVAREZ at Villa, which is VYLLA.com. And then my cell phone number is 949-309-7055. Feel free to text, call, email, whatever we can do to help. And like I said, I've got, depending where you are, I've got a team under me that can also assist with anything you guys need as well. So if I can't get right to you, I'll have one of them reach out and we'll go from there.
John, now that we put your phone number out there on YouTube, you're going to get a bunch of people calling you to want to extend your car warranty, or the National Association of Realtors is going to call you to see if you want health insurance, because they'll hit you up 10 times a day out of there. Those guys are relentless. I would love to get them calling our internet leads we have coming in, get those guys on those calls from there. So everybody, a big round of applause, unmute and tell John what a great job. Thank you for jumping on here, John. Doing that. Well done. Well done.
Thank you.
Great job, John.
Thank you so much.
Thank you, John.
Thank you guys.
Thanks,
Thank
everyone.
you.
You broke
Next
the
year,
internet,
Deb,
John.
next
That was
week.
our biggest. We hit 82 people on here today on a Monday when we
86. I saw 86. Yay, that's
86.
awesome.
Very good. When we just switched from Thursday. So we probably would have been over 100 because people will be getting on Thursday at noon going, where the heck, where to go? But Mondays at noon, everyone. We're going to have a great topic. Do we know next topic for next week? John Herhold, do we know what we're doing next week? You probably told me and I forgot. I wanted to kind of promote it. Next Monday at noon.
Jim, check your email.
Check my email.
Or, I'm sorry, check your text messages.
Okay, text me. I'm like, you emailed me or hang on. So he told me, let's see. All right, next week, here we go. Unlock your success in tough times. We're going to have mastermind panelists telling you how to thrive in a declining market.
Yep.
So you can show up next week. That's going to be great. We've got superstar agents who are selling tens and tens and tens of and even hundreds of millions of dollars of real estate that are going to be on here. But here's what we want from you. Bring a friend next week. The more people we have on these from different markets from all across the country, the better it is when we do the mastermind, because we want to hear from you. We want to have you put your input in. The questions today were amazing that were on there for John. We appreciate everybody who asked the questions. And also, if you're somebody out there like, hey, I have a specialty, I have something that I'm good, I have a niche that I work in, we'd love to hear from you, and we can get you on as one of our mastermind panelists so you can speak and you can give back to the real estate community. Because here's what we believe. Grow Global is exactly that. We're looking to help all agents from all brokerages, from all walks of life in different markets to grow your business, build it and grow it globally so that you can sell more houses, have more free time, and have more fun. And that's what we're looking to do. So I want to thank Stephanie for everything she put together today, and also for John being on here, giving us an idea of where the puck is going so we can move and be ahead, so we can be proactive and not just reactive. So thanks everybody for jumping on today. We're going to jump off now and let you get back to it and go after it. John, thank you so much for being on here. We appreciate it. Hit John up with Villa Title. He'll get you connected with your own specific person who will work on all your files, not just short sale and foreclosure stuff, but also for your other deals that you have, your traditional sales. They would love to have those too. And there's no better way probably to get some short sale referrals. If you happen to be sending them your traditional stuff, they'll know your name and who you are so that they can send you some short sale listings too.
Awesome.
Sound right, John?
I love it. Yep, exactly.
That was the best pitch I got for you, man. So
Yeah,
there you
help
go.
each other grow.
Great. I'll see you
I'm gonna
guys next week.
Yep, I'm gonna stop the recording there.